the committee will be called back to order. I want to thank the witnesses for your patience. And now, without any further delay, Ms. Sutton, you are recognized for 5 minutes of questioning.
Thank you, Mr. Chairman. Let me begin. Sorry for being late. Mr. Birch, as I indicated in my opening statement, Ohio's made the investment and is fully participating. It's on here. Mr. Birch. Ohio is fully participating in the National Motor Vehicle Title Information System. But under the rule, states aren't required to fully participate until January 1st, 2010. Do you expect that all 50 states in the District of Columbia to be in the system by January of 2010?
Yes, ma'am. That is our expectation at this time. We've had conversations with states, and I know that some of the states have concerns about meeting that date, but we've assured them that we will work with them, make it a priority to work with them to meet that date, and AMVA, our operator, has also assured us of the same.
Okay, and just so I can get a little bit more clarification, there are 10 states described in your testimony as in development. Can you just tell me what that means, where things stand?
Yes, ma'am. In development means that these states have established a timeline for establishing their participation either at the data provision level or their full participation. They've established a timeline, they've identified resources, and are actively working towards meeting those goals. And so my understanding is that some of those I apologize. Are you asking about the gray states in development, or the 10 states in development, or the states that are not participating?
The 10 states that are in development, and then, of course, there are 14 that aren't participating at all. So I want to know about them both.
Okay. So the 10 states in development have identified a timeline. They have identified the resources. They are working towards participation. And it's my understanding that as soon as within the next 90 days, some of those states may have completed some of the initial processes, and their data may begin to be contributed to the system. In terms of the 14 that are not participating, as I mentioned previously, we have had conference calls and meetings with a number of those states, and we are now in the process of arranging individual conference calls and consultations with those states to identify in which ways we can be helpful to them in meeting the January 1, 2010 deadline. I also expect that some of those states may have submitted a proposal. We had recently had a solicitation on the streets to provide some funding support for states that are not participating to bring them online. And it's my understanding that some of those states may have also applied for those funds.
And what about California, who isn't, who's providing data to the system but not allowing it to be shared with the public?
That is something that we are working on a daily basis right now with our with the point of contacts in the California Department of Motor Vehicles. I think, as has been mentioned already, this is the subject of a federal district court order that requires us to work together with California and with the plaintiffs in the litigation to try to resolve these issues. Right now, our timeline is to have these resolved by the end of this month.
Okay, and if I could just move quickly, Ms. Harrington, I'm a bit perplexed by some of the answers that you've given to questions earlier in the discussion. Following up on Ms. Schakowsky and some other things that I've heard here, the used car rule does not require the disclosure of the condition or history of the vehicle, even if the dealer is aware of specific defects, correct?
Right.
Okay. And last year, the FTC sought public comment regarding the used car rule. And in your testimony, you state that the Commission is currently giving careful consideration, and you restated that here again when you were asked about if you heard anything here today. And of course, then Mr. Van Alst gave us a lot of information here, whether or not that you heard anything here that would change or add to your determination. And I didn't really understand your answer. You just said we consider a lot of things, and I guess I'm just perplexed about what you know, the comment period closed 4 months ago. What is your time frame for making a decision?
This is a rule review. It's not a rule making.
Okay.
The time frame, I would expect that there will be a recommendation for the Commission shortly. The requirements for rulemaking under the Federal Trade Commission Act are not the same as the requirements for rulemaking that most agencies use under the Administrative Procedures Act. The Federal Trade Commission Act has very cumbersome and slow procedures in it. And so I can't give you a timeline if the Commission should commence a rulemaking because much
Okay,
of-
but when are you going to make decisions about the comments that you've received?
Well, as I said, the staff should have a recommendation for the Commission, I would think, within the next month.
Okay.
I'm not the Commission, so I can't say when it will make decisions. But what I want to caution on is that the provisions in the Federal Trade Commission Act that govern rulemaking are such that, for example, in the original rulemaking under the used car rule, that went on for years because interested parties have a right to request hearings, and then the Commission has to conduct hearings in numerous locations and make available for cross-examination all interested parties.
Okay. And Mr. Chairman, I know I'm out of time, but I'm hoping that we'll have opportunity to follow up. Thank you.
There will be a second round of questioning. The chair now recognizes the gentlelady from California, Ms. Matsui.
Thank you, Mr. Chairman, and thank you very much for calling today's hearing. I'd like to thank today's panelists for sharing their expertise with us today, and I'd especially like to welcome Rosemary Shahan to our panel. She comes from Sacramento, and her organization, Consumers for Auto Reliability and Safety, is well respected and widely viewed as one of the country's leading voices on car condition issues, and I'm really happy she's here today. One of the questions I want to ask was about subprime car financing. My home district of Sacramento is among the hardest hit cities by home foreclosures. And unfortunately, like many of our homeowners, California car buyers were also victim to predatory car financing loans. Many consumers were steered into subprime car loans. I understand that some auto financing practices closely resemble the predatory lending practices that have affected so many homeowners. Thus, I think this is a good opportunity to shed light on how these issues are intertwined. Ms. Shahan, what are the parallels between the problems we've been seeing in the mortgage industry and the auto loan finance industry?
Thank you very much. There are many parallels between home mortgage lending practices and car lending practices. And one of the biggest things that they have in common is that there's an incentive to get consumers into loans that aren't really in their best interests or don't appropriately reflect their credit worthiness. And there's a disparity very often in auto loans between the rate that consumers should get, which is the buy rate for the car, the rate that they actually qualify for based on their credit, versus the rate that they're given because there's a hidden undisclosed charge for the consumer in the form of what's known as the dealer markup. And it's very similar to what you see in home mortgage lending where the brokers have an incentive for raising the interest rate. The dealers have actually made this a major profit center for them. And part of why it's such a problem for consumers is that it's not disclosed, and it's, the Federal Reserve found that even when there is some form of disclosure regarding this, that it's confusing to consumers, it doesn't work. And we would like to see it just flat out prohibited because there's a conflict of interest there that consumers don't perceive. And very often they're led to believe that this is the best rate they could qualify for, and they're sometimes flat out told, we shopped you around for credit and this is the best rate you could get, when it's not.
Okay, well, thank you. Mr. Van Elsa, I understand that some are suggesting that the government create a data collection system to track for auto financing loans. What uses would such a system serve?
Numerous uses. One of the problems we have, as Rosemary Shahan pointed out, is that consumers don't realize when this happens to them. They don't know that they're the victim of really a conspiracy between the lender and the dealer. And also, those of us that are trying to combat this practice and trying to make sure that minorities aren't especially harmed by this practice by even higher dealer markups, it's very difficult to do that. In fact, I mentioned earlier that NCLC had been involved in some cases regarding this very issue. And I would point out those were the first sort of private enforcement cases regarding disparate impact under the Equal Credit Opportunity Act in 30 years. And the reason we don't see that happen more often is because it's incredibly difficult. You can't just have sort of anecdotal evidence and show that there's a discriminatory impact. You actually have to have statistically significant evidence. And in our case, it was over $1 million up front that people had to put to get all this information together and get it analyzed. And it involved a lot of sort of very tenuous, well, not really tenuous, but very difficult connections, drawing the lines between the loans that were made and then looking at states where there's racial information on driver's licenses and things like that. So trying to connect all those points with the information we have present is almost impossible. And as I pointed out, the FTC and the DOJ are certainly charged with enforcing the Equal Credit Opportunity Act, and this would be a tremendous tool for them and for others who are interested in these issues.
Well, could I also ask you, are there any market-based solutions that can properly address some of these subprime car loans and car condition abuses?
Well, there are real efforts. There's some tremendous organizations. Opportunity Cars is sort of an overall blanket organization that has a lot of member organizations that provide cars to low-income folks at reduced and subsidized rates. But that's not going to do it if we look at the scale of the problem across the country. Credit unions, the direct loans to their members used to be sort of the credit union's bread and butter. And what we've seen in the past 10 or 20 years is a huge shift where they're now predominantly making these loans indirectly through the dealerships. And these loans are much worse than the direct loans that the credit unions made previously.
Well, thank you. I see everybody on town. I'll follow up in my next round. Thank you.
Thank you.
The chair thanks the gentlelady, and now recognizes himself for a second round of questioning for 5 minutes. And each member who wishes will be given 5 minutes on the second round. Mr. Van Alst, you highlighted earlier a litany of financing abuses that used car dealerships employ to fleece consumers, yo-yo sales, markups, et cetera, et cetera, et cetera. Does empirical evidence show that such predatory practices are widespread and also on the rise? And in your opinion, how has the FTC handled these abuses? And what suggestions do you have for mitigating any problems or abuses in the future? I know you might have answered that before, but I want to give you a chance to expound on it a little bit.
Thank you, Mr. Chairman. I guess, sort of a multi-part question. I'd be happy to try to answer all of those. Right. I think there definitely is empirical evidence as to the disparate impact of these markups on minorities. And the empirical evidence we have comes primarily from those cases I was mentioning earlier that we were able to actually review hundreds of thousands of these transactions to show what was taking place. Unfortunately, I can't answer whether or not that's something that's increasing or anything else about it, because that really is information that's not available to people absent one of these very large, difficult sort of litigation efforts. And it's not something that you can find out without going through that process. That's one of the real problems. And certainly I think that's one of the reasons that maybe there's not been as much enforcement by the FTC and the DOJ of protections regarding disparate impact, is because you can't really get a handle on it without that information. Mm-hmm. We've got a wonderful tool that the FTC, does use, the Home Mortgage Disclosure Act, looking at issues such as this in the mortgage arena. Unfortunately, they don't have that same tool in the arena of car finance. Mm-hmm. And so while I think that there are failings on the part of regulatory agencies to perhaps enforce some of these laws, it's understandable when it's difficult to track and difficult to really combat these issues with the tools we have available right now.
Yeah, Ms. Harrington, do you feel as though the Home Mortgage Disclosure Act is a model that can be adapted to disclose information relative to automobile purchases and discrimination in automobile and exploitation in automobile retail industry?
Mr. Chairman, I don't know what the implications of requiring disclosures by lenders in the car finance area would entail fully. I think that the network of lenders and finance companies involved in auto finance is larger and in many instances operates on a more localized basis than much of the home mortgage financing does. So I can't say with confidence what would be involved in putting a broad disclosure requirement on all entities involved in auto finance, the way that the Congress did with the Home Mortgage Disclosure Act. I will absolutely agree with Mr. Van Alst that without the HMDA data, we would have a very difficult time finding evidence, getting the data that we can analyze to determine whether there are Equal Credit Opportunity Act violations in home mortgage lending. And, you know, we don't have a good source of data in the auto finance area.
All right, thank you. The chair has concluded his questioning. The chair now recognizes the ranking member for an additional 5 minutes.
Thank you, Mr. Chairman. I have a question again for Mr. Wan, if I might, on the issue of cram down or court-forced lowering of loan principals. If that were to come into effect in the auto industry, with the people that you represent, the auto dealers and those wanting to sell cars, and you 9 times out of 10 you got to arrange financing for the people that are buying the cars. If cram down were in effect in the automobile industry, would that what kind of effect might it have on your auto dealers? And if you've got an opinion on the banks that provide auto loans as well for the consumer?
Well, speaking on behalf of the auto dealers, you're going to take something, essentially a receivable that they're going to collect, and it's going to be worth much less, stretched out over time, and the interest rate adjusted. Given that this primarily affects not the average used car dealer, but somebody in the buy here, pay here industry, that would probably upset their business model and likely put them out of business. Now, hopefully, when they're engaging in these types of loans, you hope the portfolio is good. It's your own money that's in the street. And based upon the research I've seen in the buy here, pay here industry, the average consumer puts down roughly $1,000, and the average cash-in deal for the dealer is somewhere between $4,000 and $4,500. So if, in fact, the dealer who's already paying tax on the income before they receive it, so the dealer essentially has an interest-free loan to nobody, they're going to pay tax on the income, and then if, in fact, somebody, for whatever reason, winds up in bankruptcy through no fault of their own or not, and the loan is crammed down, that dealer's going to be squeezed on both ends.
Both ends.
Yes.
Yeah. Do you think that, in your opinion, do you think banks would be less or more likely to lend if court-ordered cram down was in effect in that industry?
I would say that they're probably less likely, but I will tell you, based upon a lot of the testimony I hear today, I obviously am experiencing something different than maybe some of the other people who are testifying. Because in the industry that we have with the independent dealer, we're having trouble getting lenders. So our biggest challenge right now is having lenders who will finance a transaction. We don't have finance reserve that's going to be 8 points or 5 points. I mean, if there is finance reserve, it's 1.5 or 2. We feel very strongly that service contracts are something of value at a fair price because the consumer doesn't have the money to be able to pay for the car if something goes wrong. A gap product may be there. But beyond that, we don't have anything to sell to the consumer. You've got the front end of the deal, the profit from the car sale. You've got the back end from the finance and insurance process. Our biggest challenge is getting banks that want to do business, not to work so hard to have a customer come in and get them financed and have them leave to bring them back for some sort of false circumstances. That's not my experience.
I see, I understand. Thank you very much. I yield
Thank
back,
you.
Mr. Chairman.
The chair recognizes the gentlelady from Ohio, Ms. Sutton, for an additional 5 minutes of questioning.
Thank you, Mr. Chairman. Ms. Shahan, in your testimony, you note that members of the armed forces are particularly vulnerable to deceptive financing, and I'd like to talk a little bit more about that. And Mr. Chairman, I'd like to enter into the record an American Foreign Press Service article from July of 2000 written by an Army reservist who also works for the FTC. This article details many of the same harmful lending practices we've heard about today and the shameful frequency with which they seem to target military personnel. Ms. Shahan, based on your testimony, it appears that little has changed in the 9 years since the article was written. Can you explain why car dealerships or how car dealerships are targeting military personnel? What makes these individuals particularly vulnerable to yo-yo financing and other practices?
Yes, thank you for asking. This is a problem that's really near and dear to my heart. I was married to a Navy JAG for 20 years, and it's actually why I got involved in working on auto issues instead of being a college English teacher. I had a personal experience. And the reality is that when you're in the military, a lot of times you're young, you're away from home the first time. This is the first time you get a major paycheck, you're on your own, and you are also vulnerable because a lot of times you have a security clearance that dealers will threaten, and they'll say, we put you into this car, the financing didn't go through, we want you to come back and sign another contract on worse terms, sometimes a bigger down payment, higher interest rate, or both. And if you don't agree to this, then they'll say to you, we will report you to your command, and we will make you lose your security clearance. And this is a serious problem for our troops. When there was a hearing in California before an assembly committee, members of the armed forces came and testified regarding financial readiness issues in our state, where more troops are deployed from than any other state. More stationed in our state and deployed from California than anywhere else. And it's a disgrace that they're being treated the way they are and that there aren't better protections there for them. And they testified that yo-yo financing is one of the worst problems that our troops encounter, that auto sales are the single worst financial readiness problem that they encounter. The Navy Relief Society and others also back that up with their testimony. And
can you explain what financial readiness means?
It means that the troops are expected to keep their financial house in order to be ready to serve our nation. And we have an obligation to them, obviously, to protect them while they're protecting us. And we have situations like in Arizona at Fort Huachuca in Tucson, where the fort actually had to resort to calling, determining some dealers were off limits because they were preying on the troops. In every military base in the United States, there are rings of payday lenders and schlocky car dealers. And, it's a really serious problem that affects morale and readiness and their ability to accomplish their mission.
I thank you for that answer, and if I could just, Ms. Harrington, I sort of see you weighing in. Can you tell me, I know that the FTC has a military sentinel program that's supposed to help members of the armed forces and their families who are facing financial problems even as they serve our nation. What actions is the FTC taking against auto dealers for these kinds of scamming practices?
Most recently, we've gone after payday lenders, which, as Rosemary indicated, also ring bases. We get very few complaints about car dealers and car finance. We got 1.2 million consumer complaints last year. 2,400 of them were about car financing. I would venture to say probably none of them, or few of them, came from military members. They don't complain. We've been out trying to encourage the service offices on bases to please get the complaints to us. We send our regional staffs out to work on military installations, both on education, but also, again, to encourage complaints, but we don't get them. And I think some of the reasons are ones that Rosemary mentioned, that there's sometimes there's a culture of not complaining and not coming forward. And, I know from your experience legislating in other issues that getting people to come forward when they are victims when there's a culture that discourages that is really a challenge.
Well, I appreciate that. The reality, though, is, of course, I'm coming forward on their behalf. And the fact that the Judge Advocates General stated that auto purchasing is the single worst financial readiness problem facing troops in California, and we know it's probably not isolated there, we need to find a way to address this in a more effective manner. Thank you.
The chair now recognizes the gentleman from Florida for 5 minutes of additional questioning.
Thank you, Mr. Chairman. And just to start off, the question is for Mr. Birch, Wand, and Waldron. Maybe just a commentary on Navitas. As I understand, Navitas, which was enacted or created in 1992 as an anti-car theft act, right now it does not specifically track damaged vehicles that have had airbags deployed. And as I understand, it does not cover individuals or self-insured owners that are required to provide information to Navitas. And I guess the question is, in the overall scheme of things, title washing and other acts of fraud, is there a better way than doing it perhaps through NHTSA than Navitas? This might just be a general question. Mr. Birch.
Thank you, Congressman. I think we're working diligently to analyze now where the gaps are in the information that we're preparing to collect. I think, in looking at where we're headed and looking at what the rule allows us to do, we know that there are some gaps now, but we expect that by January 1, 2010, when we have all states on board, we have all junk, salvage, and insurance carriers reporting to the system. We include certain self-insured entities will also be required to report. You're correct in that we don't have...
you don't have title washing now, right?
I'm sorry, sir?
You don't have title washing? You don't prevent or keep track of title washing and other acts of fraud?
The system does address title washing. And Title II of the Anti-Car Theft Act was, I think, focused on preventing fraud, and in particular this issue of brand washing or title washing. And so that is something that the system is currently protecting against, and as we get additional states on board and additional providers sharing information, we will address that issue even more comprehensively than we do today. You are correct in that we don't collect damage estimates. We do collect total loss determinations. So if an insurance carrier makes a total loss determination, or if a state titles a vehicle as salvage, we will have that information in Navitas.
Okay, but you don't have it now. And Mr. Wan?
Unfortunately, we face many of the same issues today that we faced back when the Anti-Car Theft Act was enacted. I think back to when Dick Morse convened the advisory group after the passage of that, and when myself and Gary Dickinson did an educational session for them on titling and title washing, and we have the same problem then that we have today.
Here we are 17 years later, and we're still talking about it.
Exactly. We still have, I think it's probably safe to assume we're not going to have a national title. So if we're not going to have a national title because we have 50 different ways of doing this, what we have to make sure we do is that we capture title brands and that we carry them forward state to state.
Yeah.
Because if we don't do that, the system is only as good as the information in there. Self-insured information needs to be trapped, and of course, any safety item is critical. We can debate what's frame damage on a unibody car, but we know when an airbag has been deployed, if that could be trapped and passed on, we could make sure it's been repaired properly.
Mr. Waldron?
We actually do have that title and registration information across all of the 50 states and have had it for a number of years. And within that data, we do track for title washing. And one of the things that we do is that we have all 50 states, and we have a giant grid of every brand in every state to understand how those work, you know, and which one is what. And those brands, once they're put on the vehicle, will always carry with the vehicle in our AutoCheck vehicle history report. So they carry across today. So we do that. We do not have all of the total loss information as we spoke of earlier, so that obviously would be a big help if that becomes in the commercial realm. And we also have many, many accidents. I do not claim that we have 100% of the accidents in the United States. No one has that. But we have a significant number of the important or major accidents in the United States across all of the different states that we pick up from many sources, government and non-government, and we report those, and those always stay with the history of the vehicle. So that's why we think it's so important to look at something in a comprehensive basis. We do have that today. What we do not have in the Invitas level is real time going back and forth. We get it. Sometimes that data is today, sometimes it's a day ago or up to like a week ago, but we do have data from every single state.
Mr. Chairman, is this at the time you're doing the second round of questions?
This is the second round.
Second round. Is it possible I could have additional time since I only ask one? In other words, you
Well,
allowed members to have 2 times?
The chair
Your
will.
call. You give me additional 3 minutes.
No, I won't give you 3 minutes.
Okay, how about
The chair
additional
will give you
2?
additional 1 minute, okay,
All right.
for another question, and we'll offer that to any other member who wishes to take advantage of it. Witnesses have been here for
okay.
a while now.
This is for Mr. Waldron. There's a lot of talk about the importance of total loss disclosure for buyers. What happens to a shopper when he's just coming across a car? Should this information be available to the shopper before even getting to the buying process? If you don't mind, just touch base on that.
Sure. We think that's very important. There was a lot of conversation today about when somebody's actually buying the vehicle, and it's sort of you're fairly far down the path when you're looking at that. What we talk about with AutoCheck is that you can use this thing in the shopping mode. You can buy an unlimited number of reports for $25 and use it for 60 days to look at as many vehicles as you want to look at, and therefore you can sort out vehicles that have title problems or other issues that you find unacceptable while you're in the shopping process. We think that's absolutely critical.
Yeah, because lots of people would be in the buying stage if they saw this information when they were shopping.
Correct. And that's why we offer it in the way that we do, and we also we want to shift the cost burden as much as we can to the retail channel, to the dealers as part of what they do, and it makes sense, and dealers buy from us oftentimes all the reports on all their vehicles, expose them all the time, both online and in the dealership. And one of the things we say to consumers is if the dealer won't give you one of our vehicle history reports, walk or run away.
Thank you very much.
Thank you, Mr. Chairman.
Yes, thank you. The chair now recognizes Ms. Sutton for an additional 1 more minute of questioning.
Thank you, Mr. Chairman. I would just like to give Mr. Van Ost a chance in his statement. You touched briefly, I'm sorry, you touched briefly on the cumbersome rulemaking process at the FTC. Do you want to just take a moment and elaborate on that?
Yes, there is, and certainly, as we've heard today, the current process which the FTC has to use to do rulemaking is difficult and cumbersome and time-consuming. And we would certainly not oppose, a regular APA rulemaking for the FTC. However, I think if that were to be the case, there would certainly come with that ability to have such a rulemaking, a responsibility to use that rulemaking effectively and to try to go ahead and move on these issues that we recognize have been with us for years and years and years, and we haven't really effectively ended yet. So while we certainly think that rulemaking would be helpful, we'd like to make sure that rulemaking is used effectively and really combat some of these practices that we've discussed today.
Thank you.
The chair really thanks the witnesses for your invaluable testimony here. You've been a superb group of witnesses, and we just sorely indebted to you for your time and participation. And we want to just note that the members will be given an additional time to submit written questions. And please be prepared to answer these questions should you receive them. So we, again, want to thank you so much for your time, and this committee now stands adjourned.